Welcome to The Explainer. Today, we're jumping right into a really strange puzzle that's happening in the markets. You've got precious metals absolutely taking off, while Bitcoin, which is supposed to be in the same family, is just sitting there. We're going to break down why.
Okay, let's get right into it. On one hand, you're seeing gold and silver just surging, hitting new highs with some incredible momentum. But then, at the very same time, you look over at Bitcoin, an asset that for all intents and purposes should be riding that same wave, and it seems to be completely stuck, flat.
So what in the world is going on here? In this explainer, we are going to unpack this whole mystery. We're going to look at the massive forces that are pushing the market, why one key asset isn't playing along, and then we'll get to the hidden, almost mechanical reason that just might explain everything. To really understand why things like gold are rallying so hard, we first have to follow the money. And I mean a massive amount of new money that's being pumped into the global system right now.
This right here shows a cycle that we see play out over and over again. Governments need cash for all their spending, but nobody likes paying more taxes, right? That's politically toxic. So instead, they just issue more debt. The problem is all that new debt could crash the system, so central banks have to step in and, well, print more money to buy it all up.
And look, this is not some new radical idea. The economist Milton Friedman pointed this out decades ago. Government spending always gets paid for, one way or another. It's either through the taxes you can see coming out of your paycheck or through an invisible tax, the slow-motion decay of your money's value. We just call it inflation.
Now here's where it gets really interesting. Where is all this new cash actually coming from? If you look at the global M1 money supply, that's the most easy-to-spend cash in the system, two countries are just dominating the scene. China is responsible for a whopping 37%, and the US comes in at 20%.
And they are both actively hitting the accelerator. China's pumping money into its system to try and jumpstart its economy. And in the States, the Fed is buying up tens of billions of dollars in assets every single month, all in the name of system stability. But the end result is the same. More and more money is flooding the world. That creates a huge tailwind for any asset that's sensitive to more cash in the system.
So all of this new money should be a rising tide that lifts all hard asset boats, which brings us right back to the central mystery here. Bitcoin. I mean, if you were to design an asset in a lab to perform well in this exact environment, it would look a lot like Bitcoin. So the fact that its price is just sitting there while all this liquidity is sloshing around, it's a real head-scratcher.
And the fundamental case for it to be doing well right now is just incredibly strong. It's famously sensitive to liquidity. It has a fixed supply that can't be inflated by a central bank. We're seeing huge adoption through new ETFs. Its potential as a way to pay for things is growing. And on top of all that, it's getting more expensive to create more of it.
And just to give you an idea of what that adoption looks like, we are not talking about small-time stuff. When a giant like Amazon with 50 million customers starts hiring people to lead a digital currency division, that signals a potentially enormous shift in how this stuff is used in the real world.
All right, so if the big economic picture looks good for Bitcoin, and its own fundamentals are solid, then there has to be something else going on. Some other force, maybe something hidden under the surface that's holding it back.
And the answer, it seems, has nothing to do with its long-term value or the global economy. It's actually a very technical, almost robotic pressure that's happening deep inside the market's plumbing.
It all comes down to this thing called dealer hedging. The simplest way to think about it is this. In the options market, the big firms that sell contracts have to manage their risk constantly. So as the price of Bitcoin moves, their computer systems automatically are forced to sell actual Bitcoin to stay balanced. This creates this constant artificial selling pressure. It's like trying to drive a car with the emergency brake pulled.
But here's the really fascinating part. That emergency brake, that mechanical selling pressure, is about to hit a huge event on the calendar that could change absolutely everything.
And that event is this coming Friday the 26th. It's a massive options expiry day. So right now, the price is being held down by all that hedging we just talked about. But on Friday, a huge chunk of those options just vanish. They expire. And when they do, the reason for all that selling just evaporates.
The technical term for this is the gamma effect. But you can just think of gamma as a measure of that automatic selling pressure. And what we're looking at here is an estimate that this one event on Friday could wipe out about half of that pressure. Just gone. It's like a giant weight that's been holding a beach ball underwater is about to be lifted literally overnight.
So if you just think about this logically, what happens next? If you take away the main thing that's been holding the price down, it should finally be free to move. Free to maybe catch up with that rising tide of global money that's already lifting assets like gold and silver. The brake finally comes off the car.
But why does any of this really matter to you and me? Well, it all boils down to one powerful theme that affects every single one of us: the slow but relentless loss of our money's buying power. You know the joke. Years ago, a lottery jackpot meant you could buy 3 houses. Today, you might be lucky if that same jackpot covers 3 really fancy dinners.
And that really leaves us with the big final question. In a world where our traditional money is designed to slowly lose value over time, thanks to that cycle of debt and printing we saw earlier, people are naturally going to look for other places to store their wealth, places where value can hide. And this strange divergence we're watching right now, it might just be one chapter in that much, much larger story.